Welcome back to ICT Trading Concept. How are you? Well, in the morning session, I was in live, so I have shown you some prediction or expectation or the trade setup, the direction, everything for the Euro USD, and I have talked about the dollar index over here. At the beginning of this video, you have seen the run for the Nasdaq. So I would love to talk about this setup and the way I read the price. Again, I will start from the dollar index. I hope that this will be helpful for all of you guys and you will get the point what I actually mean to say over there. Okay, so let's talk about the price action for the dollar index. From the high time frame, I'm expecting dollar will come to this fair value gap. Okay, now I don't want to go in detail, but I would love to just explain everything in short from here. So you can see price actually first it has taken the buy side liquidity that was very clean buy side liquidity. Price has taken that, then it expanded lower. Okay, where did it came? To this order block level. So perfectly it came to the order block, then it started to go higher. In the meantime, it has taken the sell side liquidity. I have marked this one as my sell side liquidity, but if you see, it has taken all of these lows. Okay, this is all lows, and below all of these lows we have the liquidity. So that was the last you can say the lows. From 1 minute chart you will see perfect lows over there. So it has taken the last sell side liquidity, so I have marked it as my liquidity taken. After taking the liquidity, I got the displacement and I got the market structure shift. Okay, why this one is market structure shift? Because I have a swing high on my left and I have a swing high on my right. Both of those swing high are actually lower than that swing high. Okay, so this swing high has made the perfect swing high for shifting the market structure. I have already uploaded a video to the study section from the playlist. So if you are confused about marking the perfect swing high or swing low for shifting market structure, please watch that video and I will put the link to my description, so you will get the video from that description as well. It's up to you. If you would love to watch that, you can check that out. Okay, I'm very hurry, so I'm talking too fast. So after getting the market structure shift, this was the first fair value gap and this was the last fair value gap. Both of them, this two fair value gap is on above another. So this is the well-known setup. I always called it as a well-known setup. Then over here, after shifting market structure, price failed to come over here. Okay, so it went higher and it has taken this buy side liquidity. Let me actually mark it one more time. So it has taken those buy side liquidity and that is the shallow run. So when it has taken the sell side, I mean the buy side liquidity, it expand lower, and I have shown you how I took a buy for the Euro USD for after I mean I mean expecting that market will come to this parallel gap, especially to this parallel gap. But if it is extreme, then it will come over here because this is the breakaway gap. Let me mark it as the breakaway gap. So that is actually the breakaway gap, but price didn't go to the breakaway gap. Instead of that, it come to the first parallel gap, then it started to go higher one more time, and I later you mark this high as my what to say, the perfect buy side liquidity. Though I'm expecting price will come over here, but this is the more obvious buy side liquidity and right now. Okay. So when price come here, the first parallel gap, it started to go higher. So I will show you when price started to go higher, how you will determine to take your sell for the Nasdaq. Okay, so I'm going to Nasdaq. So here is the Nasdaq, and let me actually remove that one. So in Nasdaq, this is the sell side liquidity. When I will go to 1 minute chart, you will see how beautiful the sell side liquidity is over here. I'm expecting from the higher time frame market will come to this daily fair value gap. Okay, so I'm not going through everything. I'm just making it shorter. So price is coming over here. It has taken very clean buy side liquidity. Beforehand, I have tweeted this buy side liquidity. I'll show it to you. Okay, let me show it to you first actually, so that you will understand that this is not actually a hand side. So in my Twitter beforehand, I have tweeted over here, mark the buy side liquidity. See, I have marked this buy side liquidity and told please mark the buy side liquidity. So this is the buy side liquidity over here. From 1 minute chart, this is very clean buy side liquidity. So later price has actually taken that buy side liquidity and then it started to go lower. Now I will go to 1 minute chart and I will explain the setup over here. So let me actually remove this thing. After the launch hour, price has taken all of this buy side liquidity here. Okay, then it started to go lower, but this was very difficult price action. You have nothing to do over there, in my opinion. You have to just watch the price. And now here is the sell side liquidity from the morning session, and this is the 15-minute fair value gap from so far. I mean, before, can I show it to you? I guess I can show it to you. Yeah, I can guess. I show it to you. Let me show it to you. Okay. So this is the 50-minute fair value gap or the last fair value gap. You can see this candle low and that candle high. This is the last fair value gap from the 15-minute chart. Okay. So when price came here at the morning session, I was expecting price will go higher. In the meantime, I was expecting dollar index will go lower. So we get this run, and that was the more obvious buy side liquidity. Let me go to the 1 minute chart. So price has taken that buy side liquidity. Okay. So all of this buy side liquidity has taken from here. After taking the buy side liquidity, price went lower. I didn't get any setup over here, and it is also the time I wasn't over here in front of my chart. But in my opinion, there was no setup. Now you can say this is a setup, but this is not. You see, after shifting the market structure, there was no fair value gap. So I didn't see any setup over here. Price was just falling. Then it came here. Finally, it come to this last fair value gap. Let me mark the last fair value gap from 1 minute chart. Okay, above the 15-minute fair value gap. So this is the 1 minute fair value gap. When price come to this last fair value gap, it went higher and it has taken this buy side liquidity, this high and that high. They are relatively equal highs. Price taken the buy side liquidity over here, then fall. Price taken the buy side liquidity over here. Now, this is the part of the narrative. What day is today? Today is Thursday. So this is the continuation of the expansion. Yesterday, let me show it to you. Everything, let me show it to you. Okay. So yesterday we got lower run. Okay. So that was the expansion from Wednesday. We have to expect that market will go low today as well because this is the continuation of the expansion. Okay. So price has taken the buy side liquidity. Every time price has taken the buy side liquidity, it fall. See, price has taken the buy side liquidity, it fall. Here, buy side liquidity, fall. Buy side liquidity, I was expecting price will fall. So when price has taken the buy side liquidity at the last hour, this is the last hour. Okay, guys, don't get me wrong. This is the last hour from 3 p.m. So price has taken the buy side liquidity at 3 p.m. When it has taken the buy side liquidity, then it fall like that way. This is the market structure shift. At the same time, I was expecting to the dollar index that dollar will go higher from the last, I mean the first 50-minute fair value gap. It will expand higher. So when dollar will expand higher, the Nasdaq should expand lower. So it gave me the market structure shift. When it was falling, I wasn't, I mean, hurried to take my entry. I have marked the buy side, I mean the fair value gap. So that is the first fair value gap. Now this fair value gap is valid. Why? Because this is just below the sell side, I mean the buy side liquidity. This fair value gap is not at the level of buy side liquidity or above the buy side liquidity. So this fair value gap is valid. Now below this fair value gap there is another fair value gap over here. Let me actually remove this thing. So this is the second fair value gap. Though this is not on another, I will take my sell to this fair value gap and I will cover the 50% or the whole breakaway gap. Okay, I will take my entry over there and my stop loss will be above here, above the breakaway gap. Where I will target? I will target this obvious sell side liquidity from 1 minute chart. Okay, so that should be the entry. Now when why I will take my entry over there, what is the reason? Let me remove it. Now you see market went higher, so high, low, higher, high. between two high there is a, what to say, the down close candle. Okay, this down close candle is my breaker. This high, it didn't trade any fair value gap. I can see perfectly it didn't trade any fair value gap, but it has traded this volume imbalance. Okay, just let me show it to you. This is the volume imbalance from that candle low and over here. It is very small volume balance, but it is volume balance. Okay, so it has traded this volume balance. That is the reason I saw this down close candle as my breaker. It is not a perfect breaker, okay, but you can see this is the mohawk. Price went above the breaker, little bit above the breaker. I hope price did this thing because this high didn't trade any fair value gap. If it trade the fair value gap over here, there is 99% of the chance you will see nobody will go above that breaker. You will see that 99% of the time nobody will go above the breaker, as it didn't trade any fair value gap. That is why this breaker is not a perfect breaker in my opinion, in my rules. Sorry for that. Okay. So it has actually traded the volume balance and it is not a perfect breaker, but when I see this breaker, inside the breaker this is the fair value gap, so I thought price can go to this fair value gap, then it can expand lower. It maybe it is not going to that fair value gap. That is why I have marked this one as my breakaway gap, and also I have uploaded a video about the breakaway gap. You will get that to my study section as well. Please watch that video. I hope you will understand when and how you will mark the breakaway gap. It will help you to get some entries. Maybe some of you were waiting to take your entry to that breakaway gap, I mean to this gap, but see price never went over there. It never reached over there, so you will miss the entry. But if you take your entry over there and if you cover your stop loss to this breakaway gap, then that is the perfect entry according to my rules. Okay, so price actually went little bit higher of the breaker. It went through this fair value gap and the breaker one more time, then it went above one more time, then boom, it fall. I have marked this as my first partial. Why I have marked it as my first partial? Because this is the last 15-minute fair value gap. What price can do? It can come to the top of this 15-minute fair value gap, then it can retrace. Okay, so I didn't want to take any type of risk, so I have put my target, I mean the first partial over there. Then this will be my last target, and you can see price actually went through this fair value gap, then it went below the sell side liquidity, then it come back again to the consequent encroachment of the last 15-minute fair value gap. So here if it was inside the session, I would say you that please wait for this setup. I mean, look at this setup. I already talked about this consequent encroachment retracement, something like this. Then price will go a little bit below the fair value gap, it will come back again over here. You have to take your sell over there. Okay, so if price can come back again to the low of this last fair value gap, that is the place for your sell entry, but it is already outside of the session, so I am not recommending you to take that sell, because I mean this is not the perfect time to take the sell, because price is not important if it is out of the time. First time, then price. Okay, this is the explanation of this entry. In my opinion, that is the perfect entry for the PM session. And at the morning session, I was in Euro USD. Actually, let me go over there. So I was in Euro USD and it pan out over here to this run. I was over here. I was trying to show you something over there, and some I think two three losing entry because of placing my stop loss. I placed my stop loss too tight, where in Forex you have to put your stop loss at least 5 to 10 handle. I am not trading Euro USD, but I tried it today, and finally I have actually mitigated all my losses. You can see over here account history. So I got three loss. Okay, this one wasn't my loss. That I was in live, so I already told over there, please don't count this one, and I explained why. Everything I explained, so please don't count this one, trust me. I did it for showing you what I was actually expecting. Okay, so I had 3 loss and then I got this profit. So I have mitigated all of my losses with profit over there. And here the Nasdaq, in my opinion, this is the perfect setup for the PM session, and very clean, very perfect setup. Okay, so that's all for today. If you are new, you can subscribe to my channel and you can give me a thumbs up if you like this video. Otherwise, just let it go. Okay, so see you guys. Bye bye.